let's continue our look into Alcoa's latest earnings report with Jorge Beristain. He's an analyst at Deutsche Bank and joins us on the phone from Greenwich, Connecticut. Jorge, good to have you here with us. Julie, just breaking down the release. You've had some time to go over the numbers. Is it a good report from Alcoa, or are you disappointed?
I would call it an okay result. Basically, the stock, the company reporting numbers bang on down the line with what we were looking for. Adjusted EBITDA of $1.04 billion and earnings per share spot on at 28 cents. I would give them credit, though, for some of those extraordinaries that they netted out of earnings, and they claimed they would have reported closer to 32 cents, which is where consensus was. So I'd call it sort of a slight miss at the EPS line, as your reporter said earlier. But in the grand scheme of things, I think the market should be pleased that Alcoa is still showing these strong year-on-year trends, and that we did not see them retrench on a quarter-over-quarter basis at the net income line.
And you get the, Jorge, you get the long-term agreement with Airbus. Do you want to see more of these long-term agreements? Does this make your job easier and make it easier for investors?
Well, I hope that we can get a little bit of color on what those agreements mean on their conference call this afternoon. Clearly, Alcoa continues to take a lot of its business in the direction of the downstream. They've been adding fasteners, acquisitions. They've been adding building products. So what would be good to get out of that company is, what does that really mean in terms of a net revenue add over what time frame? And I think that in the engineered products and solutions business, that's a business that the market should be comfortable assigning a higher PE multiple to because of its recurrent nature. So trying to move themselves a little bit away from the sort of typical boom-bust nature of the commodity that they sell upstream.
Jorge, it's Julie here. I was also looking at this sort of international revenue breakdown at Alcoa, and I was surprised that about a quarter of the revenue, by my calculations, comes from Europe. Is what's going on there right now at all of concern to you when it comes to orders for Alcoa's aluminum?
Well, they do have production based in Italy and Spain. I believe the bulk of that aluminum would be sold on the European continent, though not just specifically in those countries of production. Keep in mind that the engine in Europe is the German export machine, so I think that Alcoa is well levered to that. But clearly the kind of continued problems that we're getting in terms of the Greek crisis spillover effect into other countries is a concern from the GDP outlook for the second half in Europe.
Jorge, what's the most important thing when it comes to Alcoa? And I'm curious if it's aluminum prices and pricing. I mean, they're up about 24% over the past 12 months. Is that what's key in terms of what we see from EPS and revenue numbers from Alcoa going forward?
Well, they're essentially a mixed bag. I would say that roughly 30% of their EBITDA, or what they call after-tax operating income, comes from the flat-rolled business. Sorry, let me correct that. The primary business, which is their smelted aluminum business, and another third comes from the alumina business, which is a pure commodity, and the raw material that goes into that product. So you could say rough numbers that the company is 2/3 upstream and very commodity driven, but the downstream business, the engineered products and solutions, was an impressive 23% of overall after-tax operating income. So I think when you're looking at the company, yes, the key headline driver is the realization of higher aluminum prices over aluminum costs, but there's a lot of moving parts in Alcoa.
Jorge, got about 20 seconds. You upgraded this stock to a buy from a hold back in January. Any reason to change that call, or you're sticking to that buy rating at this point?
No, we're definitely sticking with our rating. We see some of the key elements that we outlined in that call as playing through. One of them is the rising energy costs in China. We think that this will be a very important driver for world aluminum prices into the second half of this year. And additionally, we think at the company level, Alcoa is getting it done. They are managing to hold the line on costs, and we are seeing that flow through in terms of rising quarter-over-quarter and year-on-year EPS from them.
We got to run. Hey, Jorge, thank you so much for breaking down Alcoa's earnings. We really appreciate it.